Are you thinking about buying an investment property in Puerto Rico? Here's some tips to help you make that a reality. Let's jump in. Tip number one is you're going to need to have sufficient funds to be able to make a 20% down payment minimum. If you can make a 25% down payment, you're going to see better interest rates and terms. And if you're able to make a 30% down payment, that's actually going to open it up to some other loan programs that you might be interested in. So it'll give you some more options. But after Hurricane Maria came and beat up the island so bad in 2017, all of the companies except for one that do mortgage insurance, not property insurance, mortgage insurance, all of those companies except for one, which is MGIC, they all left. And MGIC, the one that remained, is now going to insure mortgages on investment properties. And so in order to get rid of the mortgage insurance requirement, you have to be able to make a 20% down payment. And like I said, you'll see better rates at 25%, and you'll see better, more investment loan programs if you can put 30% down or more. Tip number two is make sure that any funds that you're going to use for that 20% down payment or closing cost are what's called seasoned. In the mortgage industry, seasoned funds mean funds that have been sitting in a bank account for at least 60 days, right? Sometimes it's 30, sometimes it's 60, sometimes it's 90. What that means is that when your loan is in underwriting, they're going to ask to see your bank statements. They're going to want to know, okay, where's the money coming from that you're going to use for the down payment and closing costs? If they look at those bank statements and they see that it was like a big deposit from a family member or friend, they're going to halt your process. You're not going to be able to get that to close. What they're going to want to ask and see is that any funds that you're using have been available to you and just sitting around in a bank account for at least 60 days, right? Sometimes it can be 30, sometimes they'll only ask for one back. Safe bet is to plan for 2 months worth of statements. And so the way that looks is that might actually take you 3 months to be able to provide, because the very first statement that you get, let's say you start a new bank account, and that you put all that funds into the first bank account, well, the first statement is going to show, these funds appearing. And so that bank account, that statement we won't be able to use. You're going to need the next 2 statements showing the funds literally just sitting there, seasoning, so that you could use it in the transaction. And so for that reason, it can take 90 days to be able to show that the money's been sitting there for 60 days. That's tip number 2. Tip number 3 is a loan program specifically for investors, which is called DSCR. That stands for Debt Service Coverage Ratio. In a nutshell, what that loan program offers is that you don't have to have employment. You don't have to show your proof of your income from any other source. You don't have to provide tax returns. All that they're going to look for and ask about is if the subject property cash flows greater than your mortgage payment, you have a loan. Now, there's a couple caveats to that. It requires a 30% down payment plus closing costs. And it's also going to need, a requirement is that whoever's on the loan has to have owned real estate at some point in the last 24 months. All that means is that your name needs to be on a deed of some property somewhere in the U.S. In the previous 24 months for you to be able to qualify. But that's it. If you've owned property at some point in the last 24 months, even if you don't have a job, they can go down as low as 599 credit score for this program. And so if the subject property cash flows greater than what the mortgage payment would be, you'll have a loan. How are they going to find out? How will they know how much it's cash flowing? There's a couple different ways. If you have access to the financials, maybe it was a rental, maybe it was like a long-term rental before, and that the seller is willing to share with you their financials of how much it's been cash flowing. You can use that information. Or the other main way is going to come from an appraisal. The appraiser is actually going to be asked to give an opinion of fair market value for what they think it would rent for, and we could go with that value as the value that we need to, that it needs to be greater than the monthly mortgage payment. Tip number 4 is sometimes called house hacking. Essentially what you could do is you could purchase a multi-unit property. Let's say it's 4 units, right? We could purchase a multi-unit property and you could live in one of them. Now, in order for that to be your primary residence, you're going to have to be able to show the underwriters and our lending partners that your income would continue exactly the same if you're going to be living in that spot. So if you're coming from another place, and you're going to be moving to Puerto Rico, you could potentially do that so long as you're able to show that your income is going to continue the same. But there's an FHA loan program that allows this in any other parts of the U.S. where you can purchase a multi-unit property. If you live in one, you can rent the other 3, let's say if it's a 4 unit, you could rent the other units out. We could actually use the future rental income of those other units to help offset your debt to income ratio. And so that's a way that we could help you get into a investment property where one is where you'd be living and the other 3 would be essentially investment vehicles, hopefully earning you some positive cash flow. Tip number 5, we get asked a lot, is it possible to purchase a property, an investment property, in an LLC? Yes, it's definitely possible, just like it is in many other places. What's the reason for doing so? So it's important to understand what an LLC actually is. The letter stands for Limited Liability Corporation. Basically, what that means is, let's say that you purchase a property in an LLC, and then somebody visiting the property, maybe the person that you're renting it to, slips and gets hurt, and they want to blame you, and they want to sue you and come after you. If you hold that property in an LLC, they're only going to be able to sue you for assets and property contained within that LLC. Versus if you didn't have it in an LLC and they wanted to come after you, and let's say that it was a bad situation, you may be really messed up and they're really coming after you aggressively, they could sue you for that property. They might be able to sue you for other assets that has nothing to do with the property. They could sue you for wages to be garnered into the future if it was a really bad situation. So if it's held in an LLC, like those letters say, it limits your liability just right there and contains the damage essentially. So if you want to purchase a whole bunch of properties in the same LLC, well, that's kind of defeating the purpose. I see sometimes people that do that. It's like, well, I hold all my properties in an LLC. It's like, that's cool, but all of those properties, if they're in the same LLC, if you have a problem in one of them, you could have a problem in all of them, because if somebody really comes after you hard and you mess something up, they can have access to those things. So guys, those are my 5 tips for people looking to come and make investment purchases in Puerto Rico. I hope that you found this video helpful. Here's the obligatory, please like and subscribe. Always appreciate comments down below telling me how I can improve, and just trying to be here and help people out. So any questions, my contact info is there in the description, as well as a link. If anybody's looking for a free financial analysis, just click on that link and I'll be happy to help you. Anyway, Nate Stewart, El Gringo Criollo, here trying to help you out. Thanks a lot for watching.